Hey guys, it is Julie here with TipRanks. Today we're taking a look at two stocks that both score a 10 out of 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a perfect 10 on the TipRanks Smart Score. Now this is a unique scoring system that looks at 8 different metrics and helps predict a score's likelihood to outperform the overall market. You can see a stock smart score from the stock analysis page on any of your favorite companies, or head over to investment ideas and the top smart score stocks, where you'll find a collection of all of those 10 out of 10 scoring companies. So today we're going to take a quick look at these two companies, what it is that they do, and of course what Wall Street analysts are predicting for the stock's future as well. Don't forget to also make sure you've downloaded the TipRanks mobile app so you can access the wisdom of over 8,500 Wall Street analysts on the go. Links will be in the description down below. Now let's get right into our two 10 out of 10 stocks. First up, we're looking at a company called Tetra Technologies. Their stock trades under the ticker TTI, currently priced just above $6 per share. And this stock has seen a lot of growth this past year, especially in recent months. Overall, they are up nearly 53%. They currently score a 10 out of 10 on the TipRanks Smart Score with bullish blogger sentiment and an increase in crowd wisdom, with 16% increase in holdings in the last 30 days. Tetra Technologies is a service and solutions company in the energy industry. Specifically, what Tetra does is provide water and fluid management solutions for companies operating in the oil patch. Tetra can work with calcium chloride, completion fluids, frac flowback, and water management, providing these oil and gas extraction firms with the expertise needed to capture, retain, and properly reuse or dispose of these fluids. They're also developing the expertise and products needed to deal with the fluids and chemicals used in building and operating large-scale batteries and energy storage devices. They shared their second quarter earnings report on July 31st, where they came out with record revenues, plus had an earnings beat for the first time in a while. Their Q3 report will be coming up in a month's time on November 9th. But looking at their Q2, they reported earnings per share of 13 cents, coming in 4 cents ahead of analyst expectations and a big year-over-year increase. Their revenue of $175.5 million was a record high and grew 25% year-over-year, with net income improving 9 times. They also saw adjusted free cash flow of $17.7 million, and their adjusted EBITDA increased 93% year-over-year. Now, the Tetra stock has not attracted a ton of attention from Wall Street, but does have a few buy ratings. Weighing in on the stock just a couple of weeks ago was Kurt Halley from Benchmark. And he says that Tetra is an essential business in a vital industry. They are a leading player in the treatment and recycling of water produced from oil and gas operations in the U.S., and this is a substantial market with 24 billion gallons of water that needs to be treated annually. The business is in a strong position to benefit from growth in deep water drilling through the end of the decade as well. Kurt is one of 3 analysts that currently have a rating on the stock, and they all come in with a buy. Their average price target for Tetra Technologies is $8 per share, which would be a growth potential of 32% from current prices. Down below, we can see all 3 ratings here. We do have a low-end price target from a couple months ago with an upside of 16%, Kurt's with an upside of nearly 33%, and a more recent rating with an upside of nearly 50%. The second company we're looking at today that scores a 10 out of 10 is Novo Nordisk. Their stock trades under the ticker NVO, currently priced at $91.30 per share. Now, they aren't as cheap as the last stock, but they also have seen some notable growth in the past year and quite steady growth as well. They're up 77%. Their 10 out of 10 Smart Score does come with increased crowd wisdom and also a notable increase in hedge fund activity, with them increasing their holdings by 1.2 million shares in the last quarter. Novo Nordisk is a Danish-based biopharma company with a focus on the treatment of diabetes. The company operates mainly at the commercial stage and has a large portfolio of medications approved and on the market. The largest category of approved meds is in the treatment of diabetes, where the company has a lineup of 20 different drugs available. Supplementing this array, they also produce and market anti-obesity drugs, hemophilia medications, growth disorder medications, and several hormone replacement therapies. They shared their latest earnings report on August 10th and did come out with an earnings and revenue miss, but saw year-over-year growth. For their Q2, revenues did grow over 31% to the equivalent of $7.93 billion US, while earnings per share of 64 cents was 4 cents shy. But the company did see their operating profit increase by 30% in Danish kroner, and sales in North America operations increased by 45%. The company also increased their 2023 outlook. Once again, we do just have a few analysts weighing in on the stock. One of those, though, is a 5-star analyst, John Eade from Argus. He wrote that Novo Nordisk has a record of impressive growth and profitability, and that over the past 5 years, they've generated 35% compound annual growth in sales. They've been on a bullish pattern of higher highs and higher lows since September of 2022. And on valuation, the shares trade at a premium to the big pharma peer group, which we think is warranted given the company's strong track record and growth outlook. And once again, we have just 3 analyst ratings, but all 3 coming in as a buy. That strong buy rating comes with an average price target of $162, which would be an impressive upside of 77%. And that is because we have a bit of an older price target here from a couple months ago, still at $214. I think that's pre-stock split. The more recent buy rating coming from Argus Research at $110 with an upside potential of 20%. So that is a quick look at 2 companies scoring a 10 out of 10 on the TipRanks Smart Score, also picking up some buy ratings from Wall Street. Let me know your thoughts on these 2 companies in the comments down below, if they were on your radar before or not, and what other stocks have you excited these days. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what Wall Street's looking at and providing some insight and entertainment, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.